Okay. I'm gonna record this for referencing, and in case anyone else want to review the recording, you're more than welcome to ask me for the video. Okay, so first things first, we're just gonna look at the US30 pair right now. There is a announcement happening tomorrow. I believe the FOMC is having a meeting, as well as the interest rate changes by the Federal Reserve is going to take place. So if you guys took my beginner's orientation class, you should already know that there are 4 fundamentals in success of trading: technical analysis, fundamental, risk management, and psychology, right? So today we're going to work on fundamental. So what is fundamental analysis? It's basically when you are doing research on the market, you're trying to figure out what's going to happen on to the market based on the upcoming news announcement. And when the announcement occurs, soon after, there will be a drastic change, oftentimes based on the severity and the gravity of the reports. So for example, tomorrow we have the federal interest rate decision. We have the FOMC economic projection and the press conference. So these two will have a impact, as well as the interest rate decision will have a huge impact. So the analysts are currently predicting that the interest rates are scheduled to go up. Who knows, there's a possibility it might go down, but right now the analysts are predicting that interest rate will go up due to the fact that there's a lot of conflict going on around the world. And in case you have been sleeping under a rock for the last couple of weeks, as you all know, there is a war taking place, Ukraine versus Russia, and that has driven up a lot of the commodities, as well as dropping a lot of the futures market. The futures market and the equities market have had a drastic impact due to the the fundamentals taking place. And yes, this is all considered fundamental analysis. So here is a question for all of you. Most of you, I do not expect to get the answer. If the Federal Reserve raised the interest, will that benefit us, or would that not benefit us? Or rather, do you think it'll have a positive impact on the US30 pair, or a negative impact?
Negative.
Who said negative?
Sean.
Okay, Sean, why do you think it'll have a negative impact?
Because the interest rates are going up.
Yes, which means?
The US value goes down. US dollar value.
No, that's not what happens. I mean, you initially got the answer right, but the reason why the US30 will go down if interest rate gets raised is because the cost of borrowing will be more expensive. And if corporation can't borrow more money with the lesser interest, it means that they will have to potentially lay off people. They will not be able to employ as many people, and their net profit will not be as much because they have to give that percentage back to the banks. So that is a reason why you will see a negative impact on the US30 pair, because US30 is a combination of all the valuable stocks in the US market, right? So what will happen if those corporation is not making as much money? It will have a negative impact to US30. So that is a fundamental that you guys need to understand. And you don't need to be an economics expert like myself. You just need to know the basics. And even myself, there's a lot of things that I don't truly know yet. So how does this make you money? How do you, knowing this fact, can possibly take full advantage of the market? Well, let's just say you see the announcement tomorrow taking place at 1800 hours. And then, wait, it was 1800 hours? Yeah, 1800 hours, I was right. So let's say you've seen the announcement happen and they released the the results stating that the interest rate will go up. At this point, we know inevitably or temporarily US30 will drop, most likely, unless the market makers push it up, but most likely it's not gonna, most likely they're gonna see a sudden drop before we see a recovery. One thing to keep in mind that whenever these drops and spikes occur, it's very temporary. So with US30, typically what they do is like soon as they see that drop happen, they will intentionally manipulate the market so that all the traders get liquidated in their positions. So you're not gonna make that happen. The idea is to take profit very early by using a trail stop loss or like just exiting the market with the profit that you made before you get reversed on your position. So how can you pass FTMO with a single position? Well, exactly what I just referred to in regards to the drastic drop that may occur with the announcement taking place. You can place, in theory, you can place a sell stop or a sell order right around where the current price is before the announcement. And then after the announcement, you can trigger that sell order and it will most likely make you that 10% that you're required to make in order to pass that test. So this is how you can use fundamentals to pass the FTMO challenge, which typically takes 10 to 30 days for an average person to pass. You can pass this in a single trade. And you will now have your 100 to 200K funding just right off the bat of one position. So it's a pretty useful technique because fundamentally, like and historically, like the news, like it's pretty accurate when these announcements take place. Like you could even cross-reference with the previous announcements. It's pretty on the ball. Like we can take a look at the previous announcements and the rate changes. It's always on the ball. So like it's safe to say like you could potentially leverage that volatility during that announcement to make not only a profitable trade, you could also make the pass the FTMO test right off one single trade. Okay, so I'm just gonna quickly end the recording so that we can have demonstrations.